Is the Smith maneuver worth it? If you're a high income earner in Canada, if you have a sizable investment account with taxable income, and you have a line of credit and or a mortgage, you may want to consider the Smith maneuver. Let's take a look at how it works. To be clear, the following is not tax advice. The Smith maneuver should only be completed under the guidance of your accountant, and I'm providing it for illustrative purposes only. So, under the Canadian Tax Act, interest paid on a loan that is used for investment purposes where there's a reasonable likelihood of making a profit is tax deductible. Here's how the Smith maneuver works. You have an investment account, you liquidate it, you send the money off to the bank account, paying off any line of credit or partially paying off a mortgage. And by the way, this works very well during a mortgage renewal, so you're not having added costs that you wouldn't otherwise. You're going to make sure that a new loan or new mortgage is issued in a separate account that is just for these dollars. The interest is charged separately. You're going to take that money, you're going to put it back in your investment account and reinvest back in the stock market. This makes the interest payments on the loan tax deductible against the investment income. Now, there are a few key points that you want to consider. Number one, if you have capital gains, obviously you're going to be realizing those in your investment account. If you have capital losses, you cannot claim those losses against your income unless you wait 30 days before buying those stocks back. That's a very important thing to remember. You also want to make sure that you're doing this when the stock market is pretty calm and you're not expecting things to be volatile. The reason is liquidating your entire investment account or a very sizable portion of it and sending it off to the bank account, you could risk opportunity costs where the market takes off on you and you're out of the market. So you want to make sure things are calm. You're going to try to do it in as short a period of time as possible. And again, making sure that you're very aware of CRA guidelines regarding the Smith maneuver. The best thing to do is to work with an accountant because they will give you professional advice and they also are experienced. And with all things in life, experience is priceless. Working with your wealth management advisor is always the best option. I'm Anna Hilbrey. Thank you so much for listening.